Okay, sorry, I'm going to have to restart this. Welcome, everyone. Pat Mitchell here, professional trader for the past 11 years. I forgot to hit go live on the stream. Usually it's automatic on my end. That's all right. We're doing it a little bit differently here this evening. How's everybody doing? Hopefully you guys are doing really well. And sorry to the ex viewers. I'm just going to redo this a little bit here. It'll take 2 seconds to get caught up. So tonight we are going to be doing a free presentation, on how not to blow up your account during this volatile election cycle. Thanks for the heads up on that, Adam, before I got too carried away. And tonight we're going to be going over quite a few points. And on top of everything that I'm about to tell you, I'm going to be showing you a live trade. This is a new one. It wasn't one that was played on YouTube. Nobody has seen this one. And we're going to be going through this. And I'm just going to give you an idea as to, no matter what the volatility is in the market, it just proves the point that no matter what the market's doing, whether it's going up, it's selling off, it's going sideways, there's always two sides to a trade. We take one trade long, one trade short, right back to back. And I'm going to show you how to set things up and develop plans on the fly. So it's going to be a really interesting one. I think you guys will really enjoy that. But during this presentation, we are going to be discussing learning how to grow your account in volatile markets. Of course, that's why you guys are here. And not to let unstable conditions impact your your day trading progress. Increase profits regardless of price action. Know when to cut the trade without trading profits for losses. That's a big one. And nail reset trades and get green on the day. So in volatile markets, just to kind of touch on that last point, in volatile markets, a lot of people will have issues where they'll take that first trade and then it's a loss, right? And they get freaked out and they get spooked out because you're seeing red on your account. You got to remember, folks, like there's a reason why the market, the stock market in general, even your trading account is set up the way it is. And what I mean by that is this green and red are a big deal. And it really drills down the whole psychological process of trading. Green candles go up, green on your P&L is good. Red candles go down, red on your P&L is bad. So green good, red bad. And those little subtleties, it's almost like a weird psyop that's happened, and they've developed it in such a way that it will spook you out. Now, that might not be something that you've thought about. That might not be something that maybe even makes sense to you, but I'm telling you, that's one of the manipulation tactics and the way things have been designed. So it's about getting yourself over that and just really developing mindset. But we're going to dive deeper into that. Let's head into this presentation. Let's rock and roll, folks. Okay, so first off the bat here, learning how to grow your account in volatile markets, that's obviously a very crucial step. It's a hard step because one of the first thing that comes to mind in volatility equals momentum or big price swings. And depends on what type of person you are. If you're the type of person that is just solely after profits, like just profits, just need to make money. I want to become a millionaire. But you don't really necessarily want to put the work or time involved into it, you're going to have problems. And this is where a lot of traders, they'll do really well in stable markets. But once we hit a certain level of volatility, the end is near, man. I've seen so many traders blow up through the years in markets like this. And this is a perfect time to be discussing these markets as we gap down into correction territory. We gap down right at 10% from highs. And it's really interesting going back and discussing like manipulation tactics. If you think about it, what happened today? Well, the market ripped back up. It held that level and came right back up. Well, why did it do that? Well, these aren't like magic price points or anything like that, right? They're not at all. Qs dipped down below that 200 SMA and then came right back up. Now, generally speaking, markets will overshoot the higher time frame moving averages, right? And when we dip down, when we gap down into an exact to the penny 10% loss from highs, That is correction, right? So they protected that correction. They got all the retail traders freaked out, spooked out of their positions. They scoop up that liquidity and it comes right back up. And this is how I've always based a lot of my trading, a lot of my day trades, a lot of my swing trades, a lot of my investments. When everybody's running, that's when I'm getting in. It's the whole thing, like, do you run away from a fire or do you go in and save bodies, right? It's kind of one of those things. And yeah, that's an extreme example, but it depends on what type of person you are, right? And it's important to know, and it's important to let people know that you have to know how the market's mechanics work, like how the market is designed. Why do certain price points get bought up? Why does it sell off? You know, all of these things, and people will say, they'll take that very level one type of thinking and they'll say, oh, it's the Fed, it's news, it's catalyst, all of these catalysts and everything. It's all intertwined. I asked my mentoring members the question the other day, like, if you were designing a game, right? If you were designing a game, you were building a game, you were the architect of that game, would you build it so that you fail? No, of course not. You're going to give yourself advantage. You're going to give yourself edge. And that's essentially what's been going on with the stock market since day one, right? Now, a lot of people will see that as a negative and they'll talk about market manipulation and everything else, right? And they'll start saying things like, oh, the market's manipulated and this and that. Okay, cool. Well, if you know your opponent, right, you know who you're up against, and you know that is something that they are after taking your money and manipulating and cheating and lying and stealing and all of that. Cool. Well, they showed you their hand of cards. You know exactly what they're up to, right? If you know the market is manipulated, why not find out the ways that they use that manipulation and how they manipulate the market and use it to your advantage? And one of the ways of doing that, and we've all heard this, is like being a contrarian, right? Doing the opposite. Now, a lot of people will say, oh, I'm a contrarian trader, but they'll never go long as it's racing down, these big red candles coming down into support levels. They'll be freaked out, right? And that's how they do it. Red bad, green good. It's even on those, just the subtle little points of the market. So it's just one thing to know, right? And these volatile markets, if you're somebody that wants to chase money, you're going to get yourself into trouble. Volatile markets these are times when we need to lay off the gas pedal a little bit and just be okay with a few more losses, right? And experience and accounts must grow together, right? Like, that's the kind of the catch with trading. And this is one of the reasons why it takes so long, is the experience factor. We need to give time to work. And I've discussed this before, where it's like when you're just trying to figure things out, if you're not learning from anyone and you're trying to figure this stuff out on your own, it's going to take you a long time, right? And the reason why it takes long is because, let's say on day one, we'll just use a nice easy figure of day one of your trading, you notice something, whatever that something is. Maybe it's like, oh, that's strange. As soon as it has a bottom and tests that bottom again, it comes up. Okay, but you need to see that. You can't act on that immediately, right? You need to see that time and time again. How many times do you need to see that before it proves that actually is something that works? That's important. So giving time to work is a crucial factor to your success as a trader. And again, it's one of those things that a lot of people don't think about. They'll see something, and I've seen a lot of new traders come in and they'll say things like, oh, that's my strategy, and they'll go with that, right? Whatever that is, a double bottom, a higher low, which are setups, not strategy. And maybe they notice something on the chart, whatever it is, it doesn't matter. And they'll take that as gospel. Well, it hasn't proven itself, right? One of the best ways to look at any trade that you are going to take is if you had $1 million and you were going to invest $1 million, right? Would you put your money up on that? And it doesn't matter if you're only trading with 100, 1,000, 5,000, 10,000, whatever it is, whatever your position size is, look at it like it's $1 million position. It's $1 million of hard-earned money. And that will start to eliminate a lot of these bullshit trades that people take. A lot of these trades that they take that are complete nonsense and you shouldn't have taken them. When people lie to themselves and they start telling themselves, oh, I just want to try something, right? That's what a lot of people do when they're paper trading and when they first start trading, right? They're going to use a demo account and paper trade. And that's one of the issues that people have. They start lying to themselves and they start picking up bad habits just through that process. It's an issue, and all of these things will start collecting through the years. It's important that people understand that stuff takes time, and every decision that you make now is a decision that is going to affect you in the future, period. So what we need to do is have very clear steps forward, okay? And maybe before I get into that, for those of you that don't know, this slide here is showing you, it's a good example of the sizing process, okay? So for those of you, and this is having to do with options contracts, don't get spooked out if you've never traded options. We do not trade options the way that they are traditionally traded. We don't talk about delta. We don't use any of that. We are day traders and we are stock traders. We trade the stock charts, but we execute via options. I know that that can sound a little confusing. I promise you it isn't. It's way easier than what you're thinking in your head. Okay, so we do not trade options, but we do talk position sizing in options. Okay, so don't get it twisted. We don't trade options. So again, this slide is just a really good idea of wheelhouse and sizing. How to take yourself from one contract to 20 contracts. So essentially that would be like trading 100 shares to 2,000 shares. Okay, and the money would equal out roughly the same, right? So in wheelhouse one, you're going to want to just take your time, right? Have one contract. You want to work on your executions only. It's not about making money at all. And this is where a lot of people get confused when I say stuff like that, because people will say, but it's always about making money. That's why we got into this. Yeah, but it can't be about making money at the beginning, folks. It absolutely can't be. Because if you're only here just solely, strictly to make money, it's like saying, you know, why does an architect get into drafting and design? For the paycheck or because they love drafting and design? Why does a doctor get into becoming a doctor and getting into the medicine field, the medical field? Well, do you think it's solely for the paycheck? Well, it's nice. It's a nice byproduct of it, but that's not why they're getting into it. They're getting in there because they care. Well, they're supposed to care about people and want to help people. Same with a lawyer. Well, one can make the argument that lawyers get involved. Sorry for any lawyers that are listening, but you know exactly how you are. They want to get involved for money, but also I've told a story just recently on one of my podcasts about a friend of mine where I grew up in Edmonton, Alberta, Canada, and his dad was a lawyer, and he got into becoming a lawyer because when he was younger, he had a traffic ticket and he argued it in court and won, and then he loved that feeling. He loved that feeling of getting it over on the police, so that's why he got into it, right? So it's not about the money. It's not about the paycheck, right? So that is wheelhouse one, contract one position. You are just working on executing the trade, coming into the level with speed and distance. It's essentially what we do, okay? And then it progresses from there. And then 2 contracts, you're still working on executions, but now you're getting the ability to add in on confirmation. Again, it's not about the money. It is a byproduct of that process. And then as you progress and you take a certain amount of trades as you go, that's when your experience starts coming up. And it's not just about experience, it's about self-confidence as well. Your self-confidence is so crucial, so key to all of this, right? There's a reason why we've seen all of these movies about Wall Street. They're all swinging dicks, right? You have to have a certain level of that in you. You need self-confidence. Now, self-confidence can lead you down the road of like ego and stuff like that. And that's not a good thing. But confidence in yourself and what you're seeing is necessary. And the ability to achieve that comes through education and knowledge and putting in the work. That's where a lot of people fail. They don't put in enough work into this because they're not looking at the right things. Sometimes you need someone to tell you what you should be looking at. Okay. So, and then if you guys want to screenshot this or save this, go ahead, keep it. This is for you guys. And I'm telling you, I use anytime there is a volatile market or a market where I'm not seeing things correctly, and it'll happen. It'll happen as I go. I will use now I won't use this. This is far too small size for myself and where I am trading, but I will use a variation of this, and I will start from scratch and work my way back up until that market either corrects or I start getting my shit together. Because remember, we're all human. We all make mistakes. So going back now to clear steps forward, that's something that we need. We need a plan. Far too many times I've seen people, even some people that run services and everything else, they wake up at like 9:28 a.m. and they fall out of bed and they come, they throw on their computer and they're in it right at 9:30. That ain't going to fly here, folks. We need to be professional in every aspect of what we're doing. That professionalism, feeling like a professional, acting like a professional will translate to your trading. Okay, so that's really important. And being a professional means that you are going to be prepared, right? So you're going to be prepared. And being prepared isn't just about a trade plan, right? Your trade plan is going to keep you safe on the day, and it's going to get you prepared of looking at what you want to look at, right? But it's not all of it. There are clear defined rule sets, and I've probably got 50 different rule sets for different variables, different examples on the chart. If the chart starts showing me one thing, I'm going to revert to a certain rule set. Now, obviously, I don't have time this evening to go through all my rule sets. That's something I would actually have to take the time to write down. This is just a collection of experience through the last, over a decade of trading. I know exactly what I need to do when I need to do it. There's no ifs, ands, or buts. The market can throw nothing at me at this point where it's going to catch me off guard. I'm always going to have a clear defined rule set and trade plan and just plan in general. And that's really important. That's something that is grossly overlooked with new traders and traders that are struggling. That's one of the things that you can definitely take away from this. Start developing rule sets, right? If the stock does this, I will do that. If something comes up that I don't understand, what does that mean? I don't trade, right? You need to see it. You need to witness it first, right? And a lot of people don't want to sit on the sidelines, but it's necessary, right? And again, the last point here is must know what to do when things don't go as planned. And that, again, will come with experience and time. That's something that's really important, right? If we don't have a plan for when things go south, and I have a clear plan, and the Tricktrades members know what that plan is because we do it all the time. In fact, I give that plan that if this level fails, we will look for this, and then we will get in here. It's just really what all of these plans and these rule sets boil down to. If there's another thing that you can take a note of from this webinar is really just they are a collection of if-then scenarios. If the stock does this, I will then do that. And I know that sounds really simple, but that's all this stuff boils down to. Really, when you just keep things simple, you're laughing. You got this stuff licked, guys. It's a lot easier than what people make it out to be. It's like the same thing that I was talking about towards the beginning about, the media kind of getting in your head with all of these, volatile markets and the market's crashing and we got a bear market coming up and everything else. It's the same thing with a lot of stuff that you've heard through the years, right? Like it's 90% of traders fail, 95%, whatever the number is, doesn't matter. It's probably like 97%. It's not because it's hard. It's because people don't either, number one, give it enough time to actually learn. And number two, it's because they are in a rush. Number three, they're greedy and lazy. That's what it all boils down to. There's a lot of lazy people out there. This isn't a career path for someone that is lazy and looking to get rich quick. It takes a lot of work. I can remember at the beginning of my career, Chrissy would bring me in, my wife would bring me in dinner in the office. I lived in the office. That was it. Sometimes I would pass out in my chair because I was working all day long. When I said, and I've said this a lot, where I would work 20-hour days, that's what I was putting into this. Now, I know some of you have 9 to 5s. Most of you have 9 to 5s, and you're not able to, but you can always find extra minutes, extra hours in the day to put forth and really give your 100%. So let's move on here. So not letting unstable conditions impact your day trading progress. And this slide, the image on it is the 3 pillars to profits or success, right? Everything needs to kind of jam and jive together, right? You can't have a entry strategy and have that work without a risk strategy. You can't have an entry strategy without knowing how to size. You can't have a sizing strategy if you don't have an entry strategy or a risk strategy. They all jive together. They all work together. And that's really important. A lot of these things, a lot of people will overlook. At the beginning of everybody's career, they're always looking for strategy. That's it. Just strategy. How do I enter into the trade? But they're overlooking 2 key factors: your risk strategy and your sizing strategy. You need those 3 things. If you do not have those 3 things, you're dead in the water. So emotions are our biggest challenge. And that's something that if you go onto my YouTube channel right here, folks, if you go onto that and you go through the list of my videos, starting with the newest and working your way back, you're going to see an uneven split between the psychology and emotional side of trading and the technical side of trading. There are far more psychological, mindset, and mentality lessons than there are on the actual technical side of things. That's one thing that I wish, and I just did a video on this, about if I could go back and start from the beginning, what would I do differently? Well, at the beginning of my trading career, I always focused on finding a strategy, working on a strategy. And of course, that's important. Don't get me wrong. But what I should have worked on first at the very start, right off the hop, was I should have been working on getting my shit together internally, right? Now, I'm someone that by nature is high strung. I have a temper. If something comes up that I don't like I have a low tolerance for stupidity, all of that. I will act on that. Okay. You need that impulse control. You have to start working on yourself. And each and every one of you is going to have one issue or another. Whatever those issues are, you need to start working on yourself. So some great resources are right on this YouTube channel, folks, like incredible resources. Don't skip over those. It's one of those things where a lot of people, those are my videos that have the least amount of views. And that's crazy because that's the stuff that will actually make you a successful trader. It's not the strategy. It's not the technicals. It's not how to enter and exit. It really isn't. It has more so to do with the emotional side of things, the mentality, the mindset. That's the important stuff, guys. Okay. It's also understanding at the beginning, and I say this a lot. It's one of my sayings that I beat that dead horse with. You don't know what you don't know. If you decide to come in, and you don't have to, this isn't what this webinar is about. If you decide to come in, you need to leave and check that ego at the door. One thing that I discussed as well in that video about if I could go back, because I'm someone that no matter whatever I've attempted in life, I've always been successful at, because I will stop at nothing. If it hooks me, I get consumed with it. Okay. And I need to get to the top. That's where I need to get to. Okay. No matter what it is. But with this is different. I wish I would have taken more time to know and realize and understand that I don't know anything, right? And just kind of give into that. There's a lot of people out there that, and you'll see them out there that, and maybe you have a neighbor or a friend or a family member. Maybe they got into, we'll use cryptocurrency as an example here. Maybe cryptocurrency is their thing, right? But they've never made a dollar on it. But they'll tell you everything that they know about it. And like, they won't talk with you about it. They will talk at you about it. And they really don't know fuck all. And it's a problem. And I caught myself doing that at the beginning of my trading career, where it was like, I thought I knew more than what I did, right? And it's one of those changes that if I could, I would definitely change. So trust me when I'm telling you, leave that stuff at the door, guys. Really cut it out. Like this sort of stuff, there's a lot of things that I will show in my videos and even in the room where they might not make sense, right? When I first developed my strategy and I switched it over to options, when I developed my option strategy, I was told by every guy on their dog on social media that it would not work. Impossible. He's full of shit, right? It's because it was never done before. So for some of you that are new to coming in and taking a look here at myself, Pat Mitchell, and Tricktrades, you need to understand that this option strategy, the way that we trade options, was never done before. And my members can absolutely back me up on this. It was never done like this. And that's how, and it's so simple. That's the crazy thing. People overlook simplicity, right? And they think if it's simple, it won't work. No, it's the opposite. So it's just looking at things with an open mind, and you really don't know what you don't know. It's kind of one of those things, right? So the goal is to see opportunity with confidence. And again, it boils down. I really want to like just focus on that word confidence off of that. That confidence is such a key factor. And I don't want to repeat myself too much in this webinar, but that confidence, that self-confidence is extremely important, folks. If you're someone that doesn't by nature have a lot of self-confidence, you have to start working on it. You have to trust what you're seeing with your own eyes, right? Because you're seeing it. It's one of those things that it's kind of just a little mindset shift is all it is. It's that mindset shift. It's like if you are actually looking at it and you can see it with your own eyes, right? And you've seen it multiple times over and over and over again. Believe it to be true, right? It's important, folks. And of course, you absolutely, without a doubt, need a strategy. Strategy is something that everybody can give me the Webster's dictionary definition of what strategy means. I can ask each and every one of you, do you know what a strategy is? And I'll get a resounding yes. Really what that answer is no. A lot of people don't. And that's not a burn. That's not me being a jerk. That has nothing to do with that. It's true. Because a lot of people, if you were to ask them, they'll say things like, oh, I enter on a double bottom. That's a setup. That's not strategy. And there's other things too. See, if you can't explain what your strategy is within 2 coherent sentences, and you can't explain that to your grandmother that absolutely knows nothing about this, then you don't have a strategy. You have word salad, and it's not going to work. In fact, there was a member years ago. His name was Ace, and he was actually he was like a literal rocket scientist. He developed the optics, the eye for the Mars rover. And he joined Tricktrades, and he was with us for a really long time, and he did really well. And he developed an algorithm based off of my strategy. And in his own words, he said it prints money because it's simple. If you cannot develop an algorithm off of your strategy and have it become successful, you don't have a strategy. And that's what a lot of people don't have. They don't have strategy. They have setups and they have ways that they'll execute, but they don't have a definitive strategy. And it's crucial and important. So now I want to share with you, this image is of a member of ours, and I'm going to pull something in a second to show you that it's not just one member. This isn't necessarily cherry picked. This is Bob Walder's P&L graph here, and it's amazing, and it shows you what can happen. So he started May 13th, and within a short period of time, using our sizing strategy that I showed you earlier, and there's more to it than the strategy than just that image earlier. But he's already grown a $2,500 account to $10,000 within such a short period of time, using extremely small size, being extremely safe. And I'm going to show you and prove to you right now that it's not just him. Now, we know that today was an extremely volatile day, right? Extremely volatile day. And we have members ranging in profits because everybody is ranging in size. But each one of these members is green. And I'm not going to click on any of these. I don't want to bore you guys too much. And then you'll see some members with 0. Well, they didn't take a trade today because of the volatility. These are the type of traders that I really enjoy working with. I have a dream job being able to work with traders with the right mindset, and they are dedicated, and they know that if something comes up, right, I'm not going to trade today. Why? Because there's rules put in place for that. It's about rule sets, what we discussed earlier. But even on incredibly volatile days, we are still profiting. And that's not just to be like, hey, look at us and all that. But it really shows that, again, what I talked about earlier about it doesn't matter what the market's doing. Up, down, sideways, doesn't matter. It really does not matter. It's about having a clear, defined day trading strategy. Do you know what type of trader you are, right? It's something that I know I've talked about a million times, folks. I know I have. But it's such an important know. Do you know? Are you a day trader? Are you a swing trader? Are you an investor? Do you hold overnight? I am specifically a technical day trader. I look for short-term opportunities to capitalize on. First directional pick, first test of that support and resistance or resistance level. That's it. And yes, there's a few extra things, of course, but that's it in a nutshell, guys. And I'm going to show you that in that live trade coming up. So we use support and resistance, like I just said. Support and resistance technicals work extremely well. And the reason why they work is because you're going to have so many traders that are, number one, technical traders. But more importantly, these are levels that the smart money has already bought previously. And they will buy again as it comes down into that protection. That is a protected level is what it is. And that's essentially how technicals work. These are price points that have already been bought previously before, right? And then when it comes down to test, they will be bought again. Or a resistance level that clears and then comes back to pull back and retest. I can go on and on and on, right? And we're going to get into that more so in the charts. But support and resistance, that's what we go after. That's it. In fact, I don't look for catalyst. Some people will say, oh, well, do you have any news scanners? Do you look at the news? I don't care about the news. I don't care about any of that. Now, some of you may be saying, well, what about Feds? That's craziness. Yeah, but a lot of that is just manipulation tactics used. If they give bad numbers, they will drive it into that support level. We've seen it 1,000 times. Members have seen this stuff 1,000 times at this point. And you can tell once those numbers come out, they're bad numbers. And these price points, you get speed and distance coming into that level. Those are smart money levels, and they get bought right back up. And if they fail, it doesn't matter because we have a contingency plan. We always have a backup plan for it. So there, it doesn't matter. Now, you have to pay yourself, right? We need an exit strategy. Now, this is going to sound really goofy to the people that are just joining us that have never seen me before, never talked to me before. But I want to take you back to the last slide where I discussed you don't know what you don't know. So have an open mind and listen to the words that are coming out of my mouth, please, because this is really important. We pay ourselves using half inch, 1 inch. And I'll discuss this more on the charts, but that's all it is. People get so wrapped up on an exit strategy. Well, we use support and resistance, natural levels, natural movement theories, proprietary to myself and Tricktrades. It's the way that I use price action, but a lot of it is half inch, 1 inch. Now, you might be asking, what the hell does that mean? What do you mean half inch, 1 inch, right? Well, it's exactly that. And I'll show you on the charts here. Let me pull up a chart and show you. Let me go to this one. Up. 1 sec, folks. Okay, so we have a level here, a level here. This is support. This is resistance. Okay. Now, let's say we open up. So that's pre-market. This is pre-market. This is regular hours. We open up and we start selling off. We come down into that level. We are to execute coming into that level. As it pops back up, do you guys see the distance there? How far is that? Roughly speaking, if you just take a really elementary look at it, it's about a half inch, isn't it? That is the first pop. If you enter with 2 contracts here, you will take 1 off here. It might pull back. Maybe we add. We're not going to get into that right now. And as it pops up, what do we got? That's maybe a little bit high. So let's take it here. What distance do you have from here to here? 1 inch. And that is more than enough, guys. And obviously, there's a little bit more to it than that. I get that. But I'm trying to tell you and explain to you what is half inch, 1 inch. If you take a look at the charts, and I'm going to draw another chart now, and you enter, right? So you enter. What do you usually have? You usually have some sort of a moving average, right? And that 9 EMA will follow that price action down, right? Most of us use 9 EMAs on our 1 minute chart. Well, that 9 EMA, as it's selling off hard and fast, becomes pretty stretched. We're pretty far away, right? So that first run up, first we have a half inch, pulls back, pushes again into that 9 EMA. If you take a look, if you actually take a look at the charts, you're going to see in relation to your eye to the chart is 1 inch. That's it. Some of you may be thinking that is absolutely bonkers. That is crazy. What is this guy talking about? Well, we got a couple hundred members in here listening right now. And I can tell you that each and every one of them will attest to the fact that it absolutely works. Now, we pay ourselves into natural movement as well, right? Oops. So if we have, and I'll go over natural movement a little bit here. We have resistance. We have support. Let's use a resistance trade. So this is pre-market. This is regular hours. Market's about to open up. Market opens up, pops up. Okay, we execute that level. We have peaks, right? And we have valleys. We have peak 1, valley 1. Peak 2, valley 2. Now, we have natural levels of support and resistance on the 1 minute chart now. Now, there can be others. There can be some on the daily chart. This is just a very basic view of natural movement theory and how we pay ourselves. We execute coming into that level. We have executed. As it comes down, where is your first natural level? Right there, right? Your first support level there, it will bounce. It may retest, generally putting in a lower high, wash through. Now we have this one and this one, peak 1, valley 2. about at that same price point. This is your next target down. And what does it give you? That, my friends, is a 1/2 inch. Second target down here is about 1 inch. It's essentially what it is. If you break things down in the most simplest way possible, that's how I get through to people. And some of you may be looking at it and it's like, oh, there's got to be way more to it than that. There isn't. That's kind of the crazy thing. There really isn't. And you can take a look on the chart here every day. What do you have? You have 1/2 inch, 1 inch. Where did SPY hold? Oops. SPY held this natural level coming into pre-market. Where did it pop up into? What do you know? Where did we pull back? Well, we pulled back right into that natural level. As we popped up, it stalled into that. Where did it stall here? Well, that natural level. Where did it pop through? There's probably a natural level there. Where did it pull back to? Right to there. Same thing, guys. And then numbers came out, comes back into this natural level. And there's also a level right in this area as well, folks, like an actual true to life support and resistance level, right? That gives you an idea. And each one of those increments is about 1 inch, right? Some more, some less. It's not a perfect science. It's not about that, but you pay yourself like that. Now, some of you may be kind of wondering, it's like, well, okay, but I don't necessarily know like how do you make like a bunch of money off that? Well, you don't. At the end of the day, folks, day traders, a lot of people want to be millionaire day traders, right? It takes a lot of time to get to. It's not about like, you don't look for wealth or generational wealth with day trading. That's a pipe dream. You need to be 0.1% of your field in order to do that, okay? Or learn from someone like that, and they can help you with that. And then hopefully you can achieve that level. But that's not what it's about. Day trading is for bill paying, right? And comfortability in life. That's what it is. Swing trading is to build wealth. We actually have a swing trading webinar coming up next month, as well as a budgeting webinar coming up next month. So these are important webinars you're not going to want to miss. But that's kind of it. So we're not looking for massive profits. When you're seeing all these guys posting 100,000, 500,000, $1 million trades on a regular basis, if you think that is real, you're insane. You're insane is what you are. You're not seeing it for what it is, because if you listen to the way that they speak of the markets, they're looking at it from a very level one perspective, and they're full of it. Okay. So when you're seeing people locking in $100,000 a day, every single day, let's just do some simple math, because there is somebody that comes to mind, and it's not who some of you may be thinking, it's someone else. But let's do the math on $100,000 a day times 252 trading days. You're looking at $25.2 million as a day trader. No, it's nonsense. And it hurts my head even like thinking about it. I think if people start crunching the numbers and doing the math, you'll start to see who's real and who's full of shit. In fact, did you know, this is a little statistic that just popped up into my head here. Did you know that the majority of day traders, like what they make on average for a true to life professional, consistent day trader, do you know that they make $110,000 to $120,000 a year? That's what you are expected to make as a day trader on average. Somebody that has been doing it for multiple years, has found consistency. That's what they actually do for a living. Not somebody that's trying to do it and this and that. They are making about $110,000 to $120,000. Now, the way that we size with us, you will make far more than that very easily. But that's the average. That's the average. So a lot of people think day traders are making millions and millions and millions of dollars. All of them, anyone that is a professional trader, that is not true. In fact, if you break down Tim Sykes's profits over the 25 years that he's been doing this, his 4 million, 6, whatever it is, it works out to be about $110,000, $120,000 on average. That's just to give you a little breakdown that if you start breaking down and doing the math, you can figure things out. So half inch, 1 inch, I know that was a little bit of a diversion there, folks, because I do want to play that trade for you. So that half inch, 1 inch, there's a little more to it than just that, but it gives you a nice perspective and a nice little target if you do not know how to work technicals and pay yourself into technical targets yet. That will help you, right? And that's what it's about. It's about getting through to new traders, right? And that's where a lot of people kind of mistake what I say, and they think that that's exactly what I'm doing. No, I'm trying to get through to traders that are starting bare bones, right? How do you get through to a trader? Are you going to spew a bunch of information and knowledge that makes you sound like the smartest person in the room? Well, you can sound like the smartest person in the room, but if you have no communication and you're unable to communicate with people, what the hell are we doing here, right? So the best way of putting it into perspective for someone that doesn't know is half inch, 1 inch. And then there's an order of operations, right? And we talked about this earlier, if-then scenarios, right? An order of operations is really important, and you got to really put that pen to paper. And it's through a trial and error type of process. If you're doing it and attempting this on your own, it's a lot of trial and error. And that's one thing that I wish when I started, if I could go over and do it again, I wish there was somebody out there that could have shown me the ropes. There wasn't at that time. And I've talked extensively about that. And that's one of the reasons why I started what I started, because the information and education that was out there was dog shit. It was horrible. And especially now it's almost worse in some ways, because the market is so saturated with people that, they're content creators. They're not actual traders. And that's kind of an issue. And I feel bad for new traders that are coming out nowadays, man. It's like, where do you even start? But that order of operations is really important. Having that plan. There's lots of videos as well on the YouTube channel that can help you with that sort of stuff. It's a collection of if-then scenarios, and that's super important. And of course, lastly, risk management. You need a risk strategy, folks. So we have a couple different risk strategies. We use our main tried and true standard risk. It's designed to keep you in the trade just long enough, okay? So when people take a look at standard risk, a lot of what they're doing is what they think it is. It isn't. It's actually much more. It's through me going through our basket of stocks. We trade 16 to 17 different stocks maximum. Right now, we've got it drilled down to 2. We only trade SPY and Qs. Okay. For a while, we were trading 4. It was SPY, Qs, Apple, AMD. Sometimes we'd throw in Meta. But when you get to develop a relationship with these charts and you know how they react, it's really important. And it's one of those things that, a lot of people overlook. They'll just go to trade Tesla because they want big profits. And an analogy I can give you is if you have 2 people, right? One person, the guy on the left, he's super neurotic. He's got a temper. He's kind of all over the place, emotionally unstable. And then you have the person on the right that is stable, level-headed, calm, cool, collected. Okay. Well, you're going to have those types of people. Plus, there's a million other personality types out there in the world, right? So then you have, let's take 2 stocks, for example. You have Tesla on the left and Apple on the right. Tesla, it has kind of crazy price action, doesn't it? It's more volatile on a day-to-day basis. What's Apple? Apple is very calm. It follows the rules. It's very clean. The action is very clean. Yes, of course, it will have its moments, but for the most part, both of those descriptions are correct. Well, there's a reason why Tesla trades like that, and it doesn't have anything to do with Tesla. It has to do with the type of person and that gravitates towards that stock. That is a collection and a big basket of personalities. And that personality type is going after Tesla. Why? Because it started to get a reputation of being huge profits, right? You see all these gunslingers out there trading Tesla. That's why. So it becomes self-fulfilling. Same thing with Apple. Apple is very clean. It's very organized. It is predictable price action. That's because the guys, the traders, the men and women that trade will go after a stock that is calm. It follows the rules. Those types of people like the rules. They are professionals. That's what they want. And that's why Apple trades the way it does. And you can take a look at every single stock out there, and they'll all have slightly different personalities. So if you don't understand, and you're always trading off of scanners, and you should not be doing that. It's horrible. But if you're trading off of scanners, that's what's going to be going on. You don't understand what that stock that popped off on that scanner is like. You have no idea. You do not have a relationship with it. Now, you might be able to form relationships over time. It's like, oh, XYZ is popping off again, right? You might, but how much longer does that take? It takes years of extra time to absolutely know definitively, without a doubt, how that stock trades. This is why I trade, my members trade, a small basket of stocks. It's so crucial, guys. I've always been a huge advocate of this. And that ties into risk management. That's where you start. That's all we can do as traders. We have to manage our risk, guys. We have to be able to manage it. That's what this is. We're essentially trading risk for profits is what we're doing. So we have to control. It's the only thing we can control. Is we don't control the market. We control our risk. So that has to start there. What stocks we choose, okay? And then you need that exit strategy and a stop out strategy. Where do you stop out? Well, like I said, we have standard risk. Standard risk is me going through that basket of stocks, going where it stopped out on, it hit a support or resistance level and blew through that support level. How far did it blow through that support level? Well, before it got scooped back up. On average, SPY during a regular market will be about 1 point from that support, definitive support level. If it decides to blow through that level, it will come down a maximum of 1 point, $1 per share, and then it will get scooped back up. And that's all it is. But that is going through each and every chart and looking at an average and then rounding up or rounding down that average. That's essentially what standard risk is. Now we have a secondary stop out strategy, risk strategy. We will use technical stops. And we use both of these in different ways, right? So having multiple stop out strategies to protect yourself is crucial. So knowing when to cut the trade without trading profits for losses. First off, it starts with having that business mindset. And I did talk about that a little bit before. And right after this slide, we are going to get into that live trade I've been promising you guys. So hang tight. So that business mindset is really looking at each and every trade that you take as a business opportunity or a business investment. If you don't do that, you don't look at it like that, you're a gambler. We can't have that, guys, at all, right? It's about being professional. So having that business mindset, looking at it like it's a business decision, like, would you get in bed with a guy that is lying to you, right? Would you sign a contract with a guy that is initially lying to you? Absolutely not. You would run. You would run for the hills. You would walk on that business deal. Same thing. If something doesn't look right on the charts that day, you walk, right? Makes sense. It's just a business deal. That's all this is. It's a transaction. And we have to be playing chess and not checkers. So I'll say that a lot because a lot of people are just playing checkers. That's all they're doing. A lot of them are even playing X's and O's and fucking having thumb wars. And that's what kind of goes on. They're not thinking ahead. You need to be multiple steps ahead. And if you're someone that doesn't naturally, because I understand, I'm someone that will think 2, 3, 4 steps ahead in everything that no matter what I do, right? Whether it's even me just working out at my farm here in the hills of Costa Rica and anything, any decision I make, I'm thinking about things from different angles, from different perspectives, the whole nine. I've always been like that. And if you're someone that doesn't do that, that's okay. That can be taught, right? But that's something that you need to start looking at. It's not just level one. It's not what you think you're seeing. It's about the other stuff that can be happening in the background. And sometimes it takes multiple moves. And that's the brilliance of having live screen share every day, is I'm showing these members through my actions. I'm going to show them exactly what the stock is going to do within a series of events. And it does exactly that. Why? Because I can see those moves 3-4 steps ahead that these market makers, these institutions, these hedge funds are doing. And then through their manipulation tactics, we can then execute, right? And we can take advantage of that. So it's about playing chess, not checkers. Super important. And again, when it's time to hold versus when it's time to cut, that's where a lot of people have a hard time. There are clues and subtleties. There are hints on the chart that if you are not looking at and you miss that, you're going to keep holding and holding, and it's going to blow through that next support level. It's because you're missing something. One of the best ways to go through, and I'm going to pull something up. If you guys give me just 2 quick seconds here, because this is great if you have not seen it. Sorry, guys. One quick sec. I got it right here. This right here. This video, if you go take a look at it and you watch it, this shows you exactly how to fix the holes in your game. Okay? That's super important. Okay, so make sure to watch that. Sorry, I kind of got sidetracked there. That's why I'm not looking at the comments yet. So that's really important. And now, let me find the video. I'm going to mute my microphone while I press play. It is synced up. It'll take a few minutes. I'm going to give you a little background on this here first. So what we have here is we took Qs long, okay? I believe we took Qs long. No, sorry. We missed the long. Some people grabbed it, some people didn't. And now we're looking for the short, and you're going to see the trade here, okay? So these are the levels of execution. SPY has a level of execution up top here into pre-market high area. So it has sound. Just listen. And I'm going to mute the mic so it doesn't get all crazy here. Oops, I kind of missed it. Okay, I'm going to execute the short on Qs as SPY is coming into these highs. Okay, locking in half already on that quick little pullback. Because there's not much meat on the bone here, remember, right? Only looking to get it back into 481. Pay myself. I've got 3 left. Pay myself right into that natural. It's come right into that natural. I only have 2 left. Paid myself 1 more, have 1 left. And there we go. So I'm going to lock in on that wash, locking in $153 on this trade off of 10 contracts. So now I'm watching the long here on SPY, but it needs to set up. Like it could hold this. This is kind of like that first level of natural, but I would start in here because it's really close into the previous close. It's within 30 cents. So I need it to come right to here in order to take it. Okay. We're looking for specific price points.
That's where I need it. So Q's, though, is coming into first level of natural. But I need SPY to pull back. SPY's the one I want because there's no resistance overhead straight up into that 9 EMA. But nice little trade, 153 bucks off of 10 contracts, man. I'll fucking take it. So I got to be real patient with this, right? Even though I want to enter here, I really do. I got to wait for that. Because we don't want it to pop up and then pull back. We want it. We want to get it. We need to pick it now to where we can capture that full trade. Start again. I'm going to add into the previous close. You're going to have to give it pretty much its full length here. So you got to be very proper with your entries. Q's right into previous close. So if this fails, that's going to tell us a story. So obviously there's multiple trades. You guys don't have to take every single trade that pops up. Okay, I'll add my last ad into here, and then I'm going to give it some time into that opening price. And now I'm just going to like see what it does because it is coming into that 20 area. There is still support. Now it's just kind of a matter of it doing what it wants to do. Q is kind of pissing around with that previous close. Coming into that 20. I could have paid myself. I was green on that. It is kind of bumping its head a little bit here, so you got to be careful. Okay, I'm going to lock in some because it is struggling. And Q's back under that previous close. So remember, we got to pay attention to this. Still into that 20. There is a potential head bump here. Remember, it tested this. It did not go above. It's not a good sign, but we still have support. So I'm trying to give it time. Locked in into that resistance area. Only have 10 left. So Q's coming back up, kind of test that area. Just trying to push. Okay, I'm going to take off a little bit here. So you're not getting that follow through yet. I still have a few. Want to solidify this green trade. It's having a problem with this price point, right? With our start in position, that's where we wanted to start. There is natural there. Just having a hard time. Q's is pushing. SPY is just a little hesitant. Should get a little bit of a squeeze here, and there might be another opportunity to add if it pops up, pulls back, and gives a proper remount. But I really want to make sure because SPY's quite hesitant, so I am paying myself. I've locked in 129 bucks on this trade, still have a few left. And then as it squeezes up, I will continue to pay myself. Because I'd like to have it come up somewhere in this area and then pull back and remount, kind of into this trend, right? That's what you want. You want it to follow like trend. But so far, really nice, easy peasy type of trade. Nothing overly stressed. It came right back into that natural area I said it could pull back into. Start in, add into previous close, give it one last add into that in that natural area. Then you just give it time. Now we're looking for a place to apply pressure. See, if we got one more candle up, I would apply pressure on this pullback into the previous close. But no dice. It didn't come up high enough in order for me to apply pressure. Now I could add, but I think there's still possibly another opportunity, and it's still a little dicey. We don't want to add into things where it's dicey. We only want to add when we know, right? Because right now we're just holding really, really small size, and if it fails, no big deal. We still locked in. Everybody making out all right here today, though? Nice.
Okay, folks, so I think most of you get the idea. I did see a comment come up about I'm not understanding a lot of this terminology. Is this taught or just picked up? No, we don't leave anything to it just being picked up. Everything within the walls, there is a video for, there is education for. We have a very clear, defined set of terminology. Literally anything you could possibly think of, it's there. It's there. So that was the live trade. And one thing too, like this is just one of many things that we do, but importance because we're discussing, you know, volatile markets and everything else right now and how not to blow up in an election year. And we are expecting to be a lot more volatile as we move forward. It's really understanding and watching both of the markets. These two trade hand in hand. The premium generally stays the same. The action generally stays the same. Right now, it's so crucial that people in volatile markets, and it's grossly overlooked, where they will always be looking for those huge plays instead of calm. You want calm. You want stuff that plays by the rules. Because when the market in general, overall, or even the world isn't playing by the rules, and remember, when you're looking forward, you're looking past, the learning stage. We start thinking ahead as professionals, as this is how you make your money. You've already quit your 9 to 5. You've retired from that. And now you're doing this for a living. We need to always be thinking ahead, because a lot of you are going to come from a background where you're relying on others, your employer, to pay the bills for you. Yes, you perform the work, but you can have an off day. You can have a horrible day and still collect your check. That's not how it is here. And it's one thing that, again, a lot of traders don't necessarily think of. So we need to stop going after those volatile stocks and treating this like an absolute circus/casino. And we need to start thinking ahead, and we need to start targeting stocks that trade by the rules. And SPY and Qs are some of the most heavily traded stocks, ETFs, ETNs, whatever you want to call them, in the stock market. And that's why we trade these specifically right now. Sometimes we will go into, we will even go into a 4 chart split. And that's where we're trading SPY, Qs, Apple, AMD. And that becomes our ETF. We watch all of those in unison, right? And I like using AMD. Just as a little side note, AMD usually gives you a heads up as to what is about to happen. So keep that in mind, folks. That one will give you a slight edge as to where the direction is actually heading. So the last thing we're going to discuss before we open up, no, we don't trade futures. Futures, I'm not interested in. And one of the reasons for that, folks, is because it is about, if you can't average and correct, I'm not interested in it. The way I trade and the way I get involved with these stocks, I want to be able to average in and collect that, get that average better, and use the volatility to my advantage. I enjoy that. That's what I do. We don't trade futures. We don't trade Forex. We don't trade crypto. We trade stocks via options. And that is it. I don't look anywhere else. It is about focus. Professionals will focus. If you're constantly looking for the greener grass on the other side, you're going to be in trouble. And I've seen people do that so many times, where this is why they will spin their wheels. They'll start out trading stocks, generally with penny stocks. Maybe they'll move to crypto. Crypto doesn't work. Then they'll move over to options. Options didn't work for them because they didn't give it enough time. And then they're off to Forex. Then they're off to futures. They're all over the place. And you're never going to find consistency in anything when you're constantly looking for that greener grass. This is why that 90% fail rate, 95% fail rate is so incredibly high. And I can speak from example because I've seen this. I've trained over 35,000 traders to date, over that. And I've seen it happen too often. And you may sense that I get a little pissed off with this topic, because I've seen far too many good traders where they are that close, and they will switch vehicles. They will switch over to Forex. They will switch over to futures. It doesn't matter the vehicle you trade. The vehicle makes no difference. If you focus and you pick any one of them and you focus and you drive towards that end goal, that's when things happen. It's like constantly, like, it's the same thing in like your 9 to 5 job. If you're someone, let's say you work for the city, right? And you work for the city your entire life, right? You're going to come out way ahead. Who are the ones that struggle, that don't have mortgages paid off potentially, or struggle to pay bills? It's because they're constantly on to another job. It's always setting them behind. And it's the same thing with this. If you're constantly looking at other things, you're gonna fail. And I just wish people would listen when it comes to that. We have made this the absolute easiest possible way to enter and exit into these trades, that it is mind-blowing how easy and how consistent it is, to not to rehash it, but when I pulled in this chart here, going through the members, this level of consistency, we've got so many people that have said recently, because we've been working our sizing strategy or our new sizing program over the past few months, they've never been this consistent. So why would you look or go anywhere else? It's crazy. But people will always think that there's something more, right? And I didn't mean to go off on a tangent, but everybody is. I just saw somebody say, I'm guilty. Everybody is, man. Everybody is. But take my word, and I hope you listen, and I hope you hear the sincerity in my voice when I'm telling you, cut that shit out. Cut it out. No more. Start focusing. I've had so many people come into my service and then they'll leave thinking the grass is greener. And then you give it 6 months or a year and then they come back, right? You do realize if you would have just stuck around and quit pissing around thinking that the grass was greener on the other side, you would be there by now. That's the crazy thing, right? And, to go back into this, it's like these reset trades are huge, especially right now. I talked a little bit about this. Don't be afraid to re-enter into trades. And I'm going to pull up a chart here. Give me one quick sec, because I'm going to show you a setup here that I use quite often. And I'm just going to use this because then I can use my drawing tools. Now I could show you guys like actual examples on the chart, but I think for trying to save time, this will just be a lot better. So again, we have two levels, right? Let's talk along. So in volatile markets, we're not necessarily sure. And these are very strong support and very strong resistance. If we open up here, the market's about to open, and we come flying down into this valid support level, we execute that trade. I will even say that this trade has higher odds of failure. So why would I still execute it? Because that is strategy. Strategy is doing things, executing a trade, even though you have a feeling in your gut, that feeling that it won't work. There's been so many times where I've executed a trade where it's like, no, I don't think this is going to work, but I have to, because that is strategy. Strategy is a process over time. It is having results over time, right? And never getting caught up on something not working once. That doesn't matter. This isn't kindergarten. I'm not worried about being wrong, right? So we execute that trade. Now, let's say it doesn't bounce and it fails. Okay, cool. Now it just told me a story where a lot of people will be freaking out in this. Although I am entered into that long, there will be, let's say there's a pre-market low level here, right? And then it came up and then, right? So we have a couple of levels here. When it washes out and it breaks that support level, it has no choice but to head into a natural level of support or resistance. So either it will come here or it will come here. There are two levels. When it comes into this level, I will add into that position. Even if it comes here, it's going to bounce either here or here. This is why I want to correct that average. So let's say it comes back up. Well, where a lot of people make mistakes is they will look at this and be like, oh, it's starting to come up. And remember, your average is here. So you're green on that trade, right? So as it comes up, they're going to make the mistake thinking it's going to go up, and it's going to go up a mile. That's a big mistake. What the stock just told you, it just told you a story. It just told you that it is weaker than expected, okay? So you need to get out as it comes up to bump its head back in to test that previous support. Now, as it's underneath, it is resistance. That is resistance. Get out coming into resistance. Now, whether that is a negative trade or a positive trade, it doesn't matter. It will be a scratch trade. It'll be very close. Okay. So you get out, because now that stock only has two choices. Either it's going to bump its head here and sell off, and there's always another way to get involved with it upon natural. So we can enter into that short or even take that short on that head bump. Sure, we can. And head bump just means it's coming up and it's literally bumping its head into resistance. When you look at these support and resistance levels, think of them as physical brick walls. That's all they are. They're physical brick walls. This is a resistance level. It's that price action. It needs to hit and it's going to bounce off. Now, sometimes if it's strong enough, it can break through, but it will have that first reaction. You see how my finger bounces off that? It's the exact same respect. That's how this stuff trades, guys. So either we get out because it's sold off, right? We get out and now we're going to reassess and we can always enter here. Or let's say you got out and it blasted through. Well, a lot of people will be pissed off. Man, I was in it. I could have been up money. No, it's the wrong way of thinking. Now it just told you a story. You see how those stocks will constantly tell you stories along the way with each incremental move? That's all these stocks do. They tell you exactly what they're going to do. So then you're going to wait for a nice, slow pullback back in to remount that support. And you're going to execute that again. It just told you everything that it wants to do. It just cleared out all of those orders back here. It bailed out, pushed up, and you want a slow, controlled pullback. When you see a slow, controlled pullback instead of a boop like that, this has a far greater chance of failing and going further into another support level. If it comes through and it gives a nice, controlled pullback, your volume bars down here are nice and even on that pullback. That is manipulation. That's what you want to see. Execute. Don't worry about being wrong, guys. Those reset trades, there are tons of ways, and there's so many different ways I can show you how to reset trades. We do that all within the room, but that's really important. Don't be afraid to get involved with these charts or these stocks, because just in case you're going to fail or you have a red trade, don't worry about that. Far too many people do that. And that's where they really mess themselves up, right? Because they're so afraid to get back in and get re-entered. You can always get back out, right? There's nothing definitive. There's nothing finite, right? Like, and that's where people need to start working on their mentality and their mindset. And lastly, never revenge trade. Revenge trades, when I went over the stuff that I could do again, or my biggest comebacks video, sorry. I just did a video. It's the biggest comebacks. That video, I talk about a revenge trade that I took. And I ended up taking a big loss. It was on SIG, and it was actually in the service years and years and years ago. And I took a revenge trade. Everybody started congratulating me on the trade. They didn't know it was a revenge trade. I kind of like sloughed it off. And once I saw members congratulate me on that trade, it really bothered me, and immediately just basically said, no, this is bullshit. I really wish that I would have taken a loss on that secondary trade, because it was a straight up revenge trade. There is a difference between a solid trade plan and a reset trade and a revenge trade. Now, it ended up being a $50,000, $60,000 trade. It was a massive trade, but it was a revenge trade, and I should have been absolutely smacked down on that. You don't want to be rewarded for piss poor trading behavior or habits, because that will catch you in the end. If you do not catch up, or you let that sort of stuff catch up, you're going to be in trouble. Is there a chat forum? Yep. We use chat. We don't use Discord. We use a professional chat room. Everything is involved. Like I said earlier, I cannot stress enough. There's anything you can possibly think of, we have. And, you know, it's before, actually, we can get into the live Q&A now. So if you guys want to get your questions in, feel free to do that. And I just need one quick second before we get into that live Q&A. If you want to know like a little more so about what we use and what we do and the whole nine, go to this video here, the race to consistency. Luke will post that link for you. Watch it after this. That tells you everything. And it's pretty amazing, actually. There's nothing that puts in more to a service. This is a premium service. We take care of you guys. We actually give a shit. So I've got a few questions here I'm going to read. Okay. So Johnny B says, crazy, came across you, Pat, and I'm from Edmonton too. Oh, cool, man. Awesome, Johnny. I'm a member now. How fast was the 6 months mark? And is that with a 9 to 5 or does it even matter? So what Johnny's asking about is the 6 months. That's part of our sizing program. It's within 6 months. We'll take you from a $2,500 account all the way to an $18,000 account. And you will be making at the start basically nothing. And then you will work your way up to making $600 per day. That takes roughly 6 months. You can do it in as quickly as 4.8 months, according to the data, as well as it's data that is backed up by real world now. And that 6 months, yes, it's absolutely doable, but don't get necessarily hung up on the timeline, Johnny. I think it's important that like people understand, like there's going to be, life's going to come up, right, man? Like we all have things that come up. So don't necessarily get caught up in the whole 6 months. I'll ask you a question, Johnny. Let's say it took a year. Let's just say, let's give it a let's double it up. That's a long time, right? Like a year can feel like a long time, right? Would that freedom be worth it, right? If you could make $600 a day average, that's just average, would a year still be worth it? I would imagine your answer would be yes, right? Like I know that when I was transitioning, like I was a rig welder. I owned and operated my own welding truck. I did that for that was one of my first jobs ever, was a welder. And then I became a contract welder and so on and so forth. I've told that story 1,000 times. And I've got that blue collar background and I wanted out so bloody bad. I felt it in my bones. So I put everything I could towards this. And I really remember that feeling towards the end. And I know what you're going through. Like I know you want out and it feels like you want to rush it. Don't rush it. Anytime you rush things, it's only going to set you back. But there was nobody there that could have shown me and pretty much guaranteed that within that short period of time, I would actually have a consistent $600 a day. Nobody does that, right? So if it did take a year, which I'm not saying it would or will, would it be worth it? I believe that answer would be yes, right? And as for a 9 to 5, sorry, no, it doesn't overly matter. Again, it's about finding the time. So we only trade the first, really, for the most part, we're executed and out within the first 30 minutes of the market open. We all know what time of day that is. So everybody can always, even if you have to like take off into the washroom or hide somewhere for a few minutes, right? Like just get somebody to cover for you, whatever it is. That's the only way to do it. We have to do what we have to do at the beginning, right? So no, that 6 months isn't necessarily dependent. It's really dependent on you and how much you put into it, right? Like listening, like really actively listening to everything I'm telling you to do, right? Don't fight me on anything and really listen and just follow that guidance. You're going to have bad days. Don't worry about it. You will progress. So Joseph writes, do you have strike prices to look for, or does it enter immediately once hit, call, or put? So John Joseph, we have, so a lot of people, when they're talking about options, they get really hung up on strike prices. That's called pricing the option. We don't do that. All we do is we choose the very closest strike into that support or resistance level. So let's say we're trading SPY, right? Let's say we're trading SPY. I can even do this. One sec. We'll make it nice and easy for you right here. Okay. This level we're looking for, or not, let's use this because it actually triggered. So SPY, we're looking to trigger short into 524.22. Okay. So we have $1 increments on SPY. What strike would you choose? Because of the delay with YouTube, I'm not going to be able to wait for the answer. You would choose the 524s, or in case of volatility, which I recommend, you can choose one strike higher, 525s. That will buy you a little bit of time if it wants to come up that little bit higher, right? So don't worry about pricing the option and all. It's very easy. I promise you. For those that might be getting hung up on the whole options thing, you have my absolute word. It is way easier than what you think it is. I know you don't know me. This is the first time you're probably meeting me or talking to me. But again, members are someone that can absolutely attest to, I'm not here to bullshit you. It's a lot easier than what it is and what it sounds. So don't worry about that. But as for pricing the option, we choose the closest strike. That's it. Into our advantage. We got a couple from Kevin. Trend lines or just horizontal support and resistance? From what you're talking about, levels. So the first answer to that is we use all technicals. Trend, we have what we call mini trend, which works phenomenally, which would blow your fucking mind, Kevin. We have trend, we have support and resistance. We use natural support and resistance, although not very often, which would be actual like whole dollar, half dollar. We don't really do that, but that can come into point into like really important levels, but mainly horizontal support and resistance, trend, as well as some very simple moving averages. We keep our technicals very simple. We do not get carried away. We don't use crazy indicators, any of that. And then secondly, you guys buying at the money or in the money. All of that, guys, like, again, you're getting hung up on options that are traditionally traded. We don't trade options like that, guys. Like, I know we execute. This is where a lot of people get fucked up. So I'm going to say this as clearly and concisely as I possibly can. Whatever you know about options, throw that shit out the window. Options are designed by the smart money to take your money. If you are trading options in the traditional sense, you're being a 90%er. And I know people will disagree with me on that, but let's compare where we're at with our trading careers and listen to the guy sitting in the seat right now. Throw that shit out the window. We don't trade options. We execute via options. I know that can sound confusing, but just don't read in between the lines there. There's no lines to read in between. We execute on the options, but we trade the stock. We don't even look at the options chart. That is just for our entries. That's it. So don't worry about pricing pricing the option with the strikes and this and that. Don't worry about that. That is something that we don't need to worry about or deal with. All of that, again, it's closest strike price. That's it. End of story. That's how we price that option. Easy peasy, guys. We don't fuck around here. We don't confuse people. We're not looking for complicated. Traditional options, the way they are traded, are designed to take the dumb money's money. That's why they're there, folks. They're traditionally used as insurance for hedge funds. And when people start, like retail traders, start fucking around with them, they start getting all fancy with them. And that is a surefire way to fail. Take my word for it, or don't. And then, oh, he's giving me, and I'm losing this. Okay, so Cody writes, from a newbie, do you show what trading platform and broker, what all you need on your charts? Absolutely. Again, and I know I've said this a few times, but it really bears repeating. Anything you can possibly think of, I promise you it is taken care of. We tell you what brokers we recommend. We tell you what charting platforms we recommend. I'll even send you the setup for TC2000, for this chart, that chart, that chart, this chart. I'll send you all of that. All you need is TC2000. I personally use interactive brokers, but I execute via DOS. You don't need DOS. DOS is expensive. I only recommend that if you can actually really afford it when you're in your trading career. For me, it just makes it easier for what I do and how I move around on this stuff. It's not necessary. Interactive brokers is great. Hedge funds use it. It's one of the best, cleanest executions. I do recommend staying away from free platforms. Don't go with free. Free is the most expensive word on this planet. From Nolan. Oh, one sec. Nolan says, Pat, I'm a new trader. I stumbled across this live and I'm blown away. I've never seen or heard anything like what you gave out for free here today. How is it that you don't have 1 million subscribers? Well, I can tell you that. It's a little off the beaten path. So if you look at my channel, you're going to see there's about 19 and a half thousand subscribers. And this is the absolute truth. And I know a lot of people will use this as a reason why their channel isn't growing and stuff like that. I'm telling you straight up, full stop, this is the truth. So years and years and years ago, I hired a moderator. Some of you might know him, Eric Russell. He used to be formerly with Tim Sykes, and then he left Tim Sykes. He went over to Awesome Calls. Now, he didn't like being at Awesome Calls. He didn't like AJ. He didn't like any of that. He thought he was a fraud. He wanted out. I was buddies with Eric, and I said, well, if you want to come on with Tricktrades, come over. Cool. Like if you want to leave Awesome Calls, come over, right? There's always a place for you. And it was the day of he came over, AJ from Awesome Calls, and he's a slithery little guy. He ended up getting my channel reported. He said a bunch of copyright strikes, or I can't remember what it was, or like some sort of sensitive content, something like that. And it got removed. And it was a fight to get it back. It was a big pain in the ass is what it was. And it took, because I have such a great relationship with my members, they went on to Twitter, X now, but Twitter at the time, and hit up the YouTube moderators and just pled the case that you guys have made a mistake. I had 1,000 people writing YouTube for me, and then they reinstated it. And my channel, you can see if you go on the back end of it, it'll grow like this with subscribers. Beautiful, beautiful subscriber count curve. And then it flattened. And now for the past 3 or 4, actually 5 years now, it's just a straight across. Just until recently, it finally ticked up. That's it. And that's the truth. So there was some sort of a pixel or ping on some sort of ding on my account, on my YouTube account since then. And we've contacted them 1,000 times. Now, finally, it's starting to grow again. But that's what happened with that. That's why. What were the biggest hurdles that you have had to overcome? Do you still find yourself struggling in certain areas as a professional? The biggest hurdles that I found to overcome were more mentality. It's all mentality. Like I said earlier, Nolan, when it comes to strategy and executing and this and that, I know a lot of people get hung up on that stuff. And I can say this 1,000 times and you're probably still going to get hung up on it. And that's really not the case. It has to do with mentality and finding yourself, working on yourself. I've done a lot of deep dives with psychedelics to help myself, deal with issues that we all have, as well as microdosing with psychedelics. I have found very useful. I know a lot of my members have found useful. There's even videos on this YouTube channel about that. Or you can go over to the Psychedelic Day Trader channel, which is the Ascension podcast that I do with Adam and Jennifer. And we discuss psychedelics and the benefits, as well as, plant medicines and stuff like that. But I will try anything if it will help me become a better trader. I am all in. That's what I am about. I am about always progressing. I have evolved so much as a trader just because of that. And so for hurdles, that's what that would be. Now, for the second part of that question, is there anything that I struggle with? I don't want to say no, because there's always struggles. There's always days where you're slightly off. Maybe you misread, but I mean, my trader or my members, my traders can kind of attest to the level of mastery that I've achieved as a trader. And I know that sounds like that's coming from a place of ego. It just isn't. When you see what gets done live on screen share day after day, and I know it sounds like I'm trying to sell you on something. I'm not. I'm just being honest with you. You will see a level that you have never seen before. This level doesn't exist. Okay. So when I can show you exactly where the market's going to go prior to it doing, I call it the crystal ball effect or natural movement theory. This is what I teach here at Tricktrades, guys. And it gives you the ability to essentially see the future. And I know that sounds like a big statement. I know it does. But there's literally, at this point for me, there's nothing the market can throw at me that is going to catch me off guard. I always have a plan, backup plan, and a backup plan for that backup plan. There's nothing that can catch me off guard, guys. And I'm not saying that I don't have struggles or stuff like that, but hurdles in the respect of trading, not so much. Now, I'm always looking to sharpen and tweak and progress my strategy and evolve as a trader. So, but in the way that question is written, not so much. But I don't want to come off like I don't have off days. We all do, right? So JP Swede is asking, how about expiration? The expiration we use because if we're trading Apple, AMD, Meta, we will use that week's expiry, right? If we're trading SPY and Qs, we use that day's expiry. We keep it simple. We're in and out of these trades. We're not holding these trades all day long, right? Like I want to be out cash probably no later than like noon, right? And I'm out like 90% of my trades within the first hour of the market open. Like I'm not worried about premium and price decay and all of that. It has no effect on what we do. We are day traders. We are in and out. We use closest expiry, closest strike, easy peasy. And what's the difference in the two plans offered as far as goods offered? Well, for guidance and mentoring, those are our two subscription plans. You have access as a guidance member. You have access to everything: the strategy, the video lessons, the scans, screen share, chat, recaps, you name it, everything. Okay, the boot camp, which is our beginners course, that's going to get you going. Everything. You have access to everything. The only thing you do not have access to is the mentoring live classes. That's for mentoring members, and I give an hour of my time once per week to the mentoring members, and we go and we discuss a very specific set of lessons on that week or on that day that maybe happened, but lately we've been doing them on Sundays. Those mentoring live classes, and you have access to all previous mentoring live classes that goes back 8 years. That is everything that I know put to paper or computer screen, essentially. But that's everything I know. Every last little piece of the puzzle, it's in there. And the beautiful thing is about mentoring, we have AI search engine where you could type in daily chart, and everywhere where it's written or said the word daily chart, it will pop up. Or if you hear me talking one morning about price action, you type in price action into the AI search. Every single video that I've ever done on price action, and it's time stamped where I mention price action. So everything is really concise. Everything is really well taken care of inside the walls of Tricktrades. And guidance, I don't want to undersell guidance. You also get access on both of those to our sizing app. Our Tricktrade Size Up app, that's what takes you from a beginning account, right, of minimal size, and you will build that within up to now. We've got it worked down to 4.8 months, but it can take about 6 months from $0 to $600 per day and up to an $18,000 account within that first 6 months. That's only evolution 1. We have 4 evolutions. That 4th evolution, not everybody's going to make it to the 4th evolution. They just won't. It's not in them. That's okay. And that's going to get you to trade size like I trade. I trade hundreds of contracts in these positions, guys. So that'll get you up to a 400 contract position. Okay. So that's way down the road, but that's what these evolutions are going and doing. It will size you up. That Size Up app, it tells you what days to size up on, what trades to size up on, how much size to use. It gives you detailed lessons as to those are the only trades that you are supposed to take, everything. Unless equal. So Sam writes a really good question here. Unless equal, do you place more value on trade entry or exit? Well, I mean, I can go both ways on that, to be honest, man. Let's talk about trade entries. Trade entries, when we are working on our trade entries, and again, if you pull up that video on how to fix the holes in your game, I'm telling you guys, right after this, go watch that. That'll change the way you look at things. It'll immediately help you fix the holes in your day trading game. I guarantee it. But it's about making those little tweaks. If I had a minute, I would pull up all of my trade entries. I screenshot my trade entries, and you can go take a look at them for reference inside the walls of Tricktrades. And what that does is you really want to strive for not perfection. You don't want perfection, but you want to make art. Okay. Day trading is art. And that's where a lot of people have problems. They access the more analytical side of themselves, the mathematics side of themselves into trading. And it isn't. You have to access the more creative, the more artistic side to yourself. And it's about really working that chart. Those entries are going to define your exit, right? If you get a shitty entry, right? And we can do this right now. I'll just show you something really quickly. Okay, so as we're racing down into the level here, what if you enter here? You jump the gun a little bit, right? And then you don't correct that average at that actual level. Well, do you see how we've already popped up a ½ inch, almost an inch here, and you're just green? So your exit, because you can't just continue to hold because you fucked up on your entry. Your entry in some way, actually, now that I'm saying it out loud, is far more important. You need to work on those entries, right? And you can't be afraid. If you enter here and you got in a little bit early, you need to correct that as it comes in. Maybe you didn't get dead nuts bottom. It's not about going right after bottoms. Maybe you got in here, putting your average here. And then on that, you are back green properly, right? So if you're entering too soon, you need to make those adjustments or you're simply going to fail. And that's what that video that I'm discussing, how to fix the holes in your day trading game. Go watch that. It will 100% help you. Absolutely. Yeah. Live chat is regular trading hours. Chat's open 24/7 though. Okay, guys. I'm sure I missed a bunch of questions, but we've been here for quite a while. I hope you all have a wonderful evening. But before you go, 1 sec, please. I do have something special for you guys for joining and attending. Since you guys signed up and watched this live, but you need to act now, there is a sign up link here. You need to use coupon code. You need to use coupon code ACTION, and that will get you signed up. So thank you for attending the webinar. Please click that link, and that will give you all of the information. Please read it thoroughly before just jumping in and jumping the gun. I appreciate each and every one of you guys for coming out. We're going to be doing more of these webinars. Like I said, we're going to be doing one on budgeting, getting you prepared to become a full-time trader. You're not going to want to miss that one. Plus, we have a swing trading a webinar that's going to be coming out here soon. I appreciate, again, all of you guys coming out. Thank you very much. I appreciate all of your time, and I will see the members tomorrow, and I hope to see some new faces soon. Adios, folks.